Back Philip Petursson, Chief Investment Strategist at IG Wealth Management, for his perspective. What have been your thoughts on the movements in oil recently?
So when we look at it on a year-over-year basis, it hasn't moved that much. It had a bit of a downswing, then upswing in the last few months. And we would say largely that the pressures on oil are probably to the upside, in that globally supply is tight and demand continues to increase. But you know, the war that's ongoing in the Middle East right now can change that very quickly, either one side or the other. It can tighten supply further, or it could spur I would say demand contagion around the world, which would drop the demand for oil, and we see oil prices fall. So it's really, really tricky to navigate the price for oil right now.
And what's generally your take on geopolitical jitters? And we just finished a segment on the stock market and watching the economy and what could happen into the end of the year. How does the general uncertainty play into the investment story?
It weighs on sentiment, and it can contribute to short-term volatility. It doesn't tend to impact the markets with any meaningful force over the long term, but in this case, when it involves the Middle East and could spread to oil-producing nations, that's where it throws that wrench into the middle of that theory, because, again, it could swing the price of oil. Oil prices move up, it becomes a global tax on the consumer, and it can weigh on economic output. So for the time being, we can't quantify the impact on the war, because it hasn't changed the oil fundamentals, but it is something that we are watching. Let's
shift from oil to gold, and obviously bullion traders have been watching the headlines tied to the war, but also watching what central bankers are saying about interest rate policy, and the movements in currency can also be a contributing factor. But we had seen gold prices move above $2,000 an ounce. They have pulled back a little bit here. What's been your assessment?
Yeah, I think gold has been weighed down by the strength in the U.S. dollar for most of this year. They tend to be inversely correlated, so as the U.S. dollar strengthens, gold tends to weaken a little bit. Now, if we think that the U.S. dollar is going to soften from here, and I think that is our base case going into 2024, that's positive for gold. We think gold is undervalued by potentially 20%. And once it catches this bid and solidly breaks through 2,000, we think it can go higher to potentially 2,400.
Since you're talking about the U.S. dollar, the loonie, which has had a lot of struggles against the greenback in recent months, seems to be hanging around that 73-cent U.S. level right now. Since we talked before the break about the likelihood, in your opinion, that the central bank in this country is done with rate hikes, how are you thinking about what will happen with our Canadian dollar going forward?
Right. It all hinges on what the Fed is going to do and the difference in interest rates between Canada and the U.S. I think last week when the market took the signal out of the Fed that they were done, that was a bit of a boost to the Canadian dollar. It narrows that deviation in interest rates between our two countries. If the Fed chooses to raise rates, and we believe Bank of Canada won't, that would put downward pressure on the Canadian dollar. So we're thinking somewhere between 70 to where we are, 73 cents, with some risk to the upside. But the risk is right now, I think, a little bit more skewed to the downside, in that the Bank of Canada might be forced to cut before the Fed.
Okay. Well.